buying tax delinquent property before the auction. I've been involved with a subset of the traditional real estate business for over 30 years. Now, when I say traditional real estate, you know I mean homes, small apartments, small office buildings, maybe even residential lots that are buildable. So the traditional real estate business is what everyone's used to, but I'm going to talk about a subset called tax lien certificates and tax defaulted property. So traditional real estate employs thousands of people. Not only do you have brokers, you have agents, you're going to have title companies, you're going to have attorneys, you're going to have appraisers, you're going to have handymen. You're getting the idea. So that's traditional real estate. Today we're talking about non-traditional real estate, and this subset is mostly homes, as I've already just mentioned, apartments and small buildings. However, the seller in this situation is the government, because what's happened is the government has foreclosed, they have confiscated and seized property for non-payment of taxes, and when the people don't pay their taxes, they're going to lose the property to the local county. Okay, so the county, what are they going to do with those properties? Well, they don't want them. They've got their own property. They own the schools. They own the office buildings. They own the parks, whatever. So they don't want the property. So they're going to sell those properties, and they usually start the bidding at very close to the back delinquent taxes. So that means there's going to be huge discounts on these properties, okay? So there's over 3,000 counties across the United States, over 3,000 plus counties, and they're all authorized to have a tax defaulted auction. And their starting bidding is usually very close to the back taxes. So that means you could be buying properties for 10 and 20 cents on the dollar. It also means, if you think about it the other way, they also could be selling the property 60%, 70%, or 80% below the tax assessed value. So the point is, they're giving you a bargain on these properties. All right, now not only do you get a bargain property, but when the property is sold at auction, the mortgage is wiped out. That means it's canceled, and so is the deed of trust loan. So what are we talking today? What we're talking about today is buying tax delinquent property before the auction, okay? That's what our episode is all about. Now, that's different than buying in an auction. You're talking about buying before that. All right, now, if the county can't collect the taxes, the property taxes, that causes a big problem at the county. What's the problem it causes? Well, the county uses the revenue from property taxes to pay the school teachers, to pay the police department, sheriff's department. Of course, they have lots of bills to take care of roads, the county employees. You're kind of getting the idea. So all of those bills that the county has, generally that revenue from the tax lien pays all of that. So the county, if they can't collect that, they have to take action relatively quickly. And what they do is they send out tax bills. So who does all that? Well, the treasurer does all that. And that's under the direction of the legislature and the county commissioners and the board of supervisors. They tell the treasurer, you must levy the taxes. Once you've levied the taxes, you have to try and go out and collect those property tax. If you can't, then you have to confiscate and resell the property, and they resell the property at a tax defaulted auction. Now, why do they resell it? Well, like I just said, they need that revenue to pay the taxes so all the county employees can be paid. All right, so this is not unusual business, been around for a couple of hundred years. County confiscates the property, they don't want it, so they're going to sell it at discounts, huge discounts, way below the tax assessed value in many cases. All right, now once they've set it for auction, they've done that, they put it on the county website so you know that, they put it in the newspaper so you know that, so that's their way of posting or advertising that the property is for sale. Now the county is legally required to send many notices of default, which are called due process of law. So as that process is taking place, many people are watching because they want to be able to go to these auctions. Certain investors are saying, wait a minute, I want to buy at 10 cents, 20 cents, 30 cents on the dollar with no mortgage. That's a good way to buy property if you're buying it at the auction. All right, now today our episode is all about buying tax delinquent property before the auction. All right, now that's a whole different ballgame. All right, now keep in mind, I don't make the rules. The county is going to make the rules. The auctioneer, which is the treasurer, is going to follow those rules, and they're going to print all those rules on the county website. So nobody's hiding anything. This is all out in the public. So the process is somewhat lengthy when it comes to the legality of all that, but it's all open to review, and you can watch the whole thing takes place. So today's episode, what am I doing? We're talking about buying tax delinquent property before the auction. So you need to be very careful. So I'm going to give you a warning right now. What happens when you buy before the auction, that means that you're going to get all the encumbrances. That means if there's a lien on the property, you're going to have to pay it. If there's a tax on the property, you're going to have to pay it. If there's a mortgage on the property, you're going to have to pay it. If there's some other judgment against somebody on the property, you're going to have to pay it. All right, so when the county sells the property, they're going to sell property, and they're going to clear the deed of trust loan, and they're going to clear the mortgage, and many of those junior liens are going to be cleared off the property. Now, the county does not sell the property giving you any warranties. They don't give you any warranty. They're selling it as is, so you're going to buy it with a quit claim deed. All right, but today's episode isn't about that. Today's episode is all about buying tax delinquent property before the auction. If you buy before the auction, that means that you're going to get everything that's on that property. And everything that's on that could include a mortgage, a deed of trust, a judgment lien, a lien from a dentist, a lien from someone that didn't get paid a bill, a credit card lien. All of those things could be on that property. Not unusual for this to happen, I can assure you. Okay, so tax defaulted properties, what are they? Well, some of them are junkers. You don't want to buy the junkers. Some of them are used and abused, and there are others that just need to be cleaned up and you can move in. All right, so there's a choice when you come to auction. So you don't get to go inside these and check them out. You got to go out and look at them, and then you need boots on the ground. That's important because you don't know what's happening. What if there was a hurricane? What if there was a fire? What if it was next to a chicken farm or a pig farm or something like that? You don't want to buy properties that already have other encumbrances to keep you from selling it. So you need to have boots on the ground, check the property out. So every property should be checked out if you're a buyer. But if you're buying a property before the auction, understand anything that's on that property in terms of liens is going to be your babies to pay. All right, now a lot of people are anxious. They want to make a deal, and they want to get in on making the deal before it goes to the auction. It's okay with me if you want to buy before the auction, but remember that you get all of the things that attach to that property, and that means you're going to have to pay all those. All right, so what I'm saying is, if you're going to buy tax delinquent property before the auction, you're taking on high risk. This is a high risk purchase because you're taking on all those liens. So when you buy before the auction, everything is attached to the property. All of that is your problem. All right, now what happens at a tax auction? The beauty of the tax auction is that the county can cross out the lien. What does I mean by that? That means the county can wipe out a mortgage or a deed of trust lien. Well, if you don't have a deed of trust lien or mortgage, that means you're going to get it relatively clear. Okay, they can also wipe out other judgments in junior liens. So buying after the auction take place is a better deal than buying before the auction. Now, I know there's a lot of people out there preaching, get these properties before the auction, you're going to make a big deal. Just make sure you understand what you're doing. When you buy before the auction, you are taking on all of the burden that's on that property. So unfortunately, a lot of auction buyers are trying to outsmart the bidders and trying to outsmart the county. Folks, you're not going to outsmart anybody when you're buying a tax delinquent property before the auction, because everything that's on it, you're going to get. Now, if you know how to check the property and you know that there's no other liens on it, that's a whole new ballgame. But I'm in the business of teaching people how to do this, and I don't want to see you make that big mistake. And some people buy the property, then they find out it's got a mortgage on it, then they find out there's another junior lien, then they find out there's other encumbrances on it. So you got a big, you're really taking something on when you do that. Okay, so it's not unusual for people to do that. All right, so pre-auction buying, you need to know what you're doing. That's nothing more than buying a foreclosure. When you're buying foreclosures, same thing's going to happen. If the bank auction doesn't take place, you're going to get all the liens that are attached to that property. So do you want those judgments? Do you want those liens? I'm telling you ahead of time, this is my big warning to you. If you're going to buying tax delinquent property before the auction, you're taking a huge risk, in my opinion. I wouldn't do that. Now, I always want you to do what I say, and that is check the property before you buy. In other words, go there, look at the property, make sure that the property is there, the structure's there. I don't know if there was a big fire, or I don't know if there was a windstorm or a hurricane or a flood. I don't know that. The next thing that's very important for you to know is know what your selling price is before you buy it. In other words, figure out an exit strategy. If the property can be bought for 10 or 20 cents on the dollar and there's a big margin there between that and the retail value is $100,000 and you could sell it for between $20,000 and $60,000 quickly, remember it's used and abused. If you want to sell it quickly, that means you got to discount it. All right, so you need to figure all that out before you go to the auction. When we talk about tax liens and deed properties, people like to have a list so they can look up and see what's on it. If you haven't seen one of those lists, we produce those so you could have a free list, a free one. All you have to do is go below me and you can request an auction list and we'll send it out to you so you know what it looks like. I'm Ted Thomas. See you on the next video.